Hey folks, this is Alex and welcome to my channel. I think we all know who Warren Buffett is and the multitude of quotes and one-liners that he's given in the past, both for their wisdom and because they're frankly hilarious. But there's one quote from Warren Buffett that very few people know about, and it's an extremely important quote considering today with COVID-19, its economic impact, and how the stock market has been performing. So in this video, I'm going to share with you what that quote is, the context around the quote, and why it's important today. But before I begin, please hit the like button, consider subscribing, and it really helps me out. I appreciate it. Thank you. So before I get into the quote, you need to understand a little bit about the context. It's 1967, the civil rights movement's going on, we have Vietnam War, and the Dow had recently broke 1,000. To give you some comparison, the Dow is now around 26,000, so a lot has changed since then. In the investing world, this was referred to as the go-go years. This was a time when the performance fund was all the hype. A performance fund is basically like a mutual fund, a combination of stocks and bonds, but it was traded like a high-volume stock. Investors were promising people that these performance funds would not just beat the Dow, but beat the Dow on a timescale unheard of. It wasn't going to beat the Dow on a yearly basis, quarterly basis, or monthly basis, but actually on a weekly and sometimes hourly basis. So people were buying and selling these performance funds left and right. Trading volume went from 2 million shares a day to 10 million shares a day. And most importantly, people were getting rich. People were getting very rich. And Warren, at the time, had his own investing firm. And Warren had a fantastic track record starting from 1962 when he started it to that time. He was beating the Dow consistently. If you're interested in learning exactly what was Warren Buffett's track record at the time, here it is. Pretty darn good, if I say so myself. But Warren was very much worried about if he was going to beat these performance funds, or even outperform them. People were getting rich left and right. Some people were making, I believe Fred Carr said that he, at his peak, was beating the Dow by 116%. But Warren took a different approach. His investing strategy was very different from the high volume trading that people were doing today. Warren Buffett was a disciple of Benjamin Graham, many considered to be the father of value investing and the author of what's arguably the best investing book out there, The Intelligent Investor. As a disciple of Graham, Warren Buffett looked for quality companies that were trading at very inexpensive prices. He was trying to find value. And with elevated stock prices, it was very difficult for him to find the value he was looking for. Other people were getting rich off of performance funds, and he was just left frustrated. His old strategy for making investments is no longer working. During this go-go era, stock prices were just skyrocketing, and Warren was unable to find any deals. And he was also frustrated that everybody else was just getting rich. It really started to weigh on him and even question his own ideas and philosophy. And it is in a letter to his partners that reveals what I consider to be one of Warren Buffett's most underrated quotes. Here it is. When the game is no longer being played your way, it is only human nature to say the new approach is all wrong, bound to lead to trouble, etc. I have been scornful of such behavior by others in the past. I have also seen the penalties incurred by those who evaluate conditions as they were, not as they are. Essentially, I am out of step with present conditions. On one point, however, I am clear. I will not abandon a previous approach whose logic I understand, even though it may mean foregoing large and apparently easy profits to embrace an approach which I don't fully understand, have not practiced successfully, and which possibly could lead to substantial, permanent loss of capital. Warren was unwilling to change his approach, the logic behind the approach. There was no logic to the go-go era performance funds and what are described as gunslingers, the high-volume traders that were getting rich. And in recent days, the stock market is doing very well considering the global economy and how COVID-19 has been impacting it. Now, I understand that the stock market and the economy are two different things and that they are not directly connected, but they are related. Similar to the go-go era performance funds, and wild speculation, today we're seeing very similar things in the market. Due to social distancing rules and just stimulus money, a lot of people have just turned to day trading. They're spending their stimulus money day trading, and in huge volumes. This, in turn, is artificially inflating stock prices. Let's take a look at Hertz Rental Car Company. On May 22nd, Hertz Rental Car Company filed for bankruptcy. On May 26th, Hertz Rental Car Company stock was trading at about 56 cents a share, which is far from its 2019 average of about $15 a share. Definitely very low. But a few days later, on June 8th, it was trading at $5.53. This is a company that's bankrupt, people. How on earth is its stock value increasing? So it's clear there is some kind of disconnect between the economy and the stock market, and it is in fact leading to wild speculation in the market. Now, personally, growing up, I had very mixed views of the stock market. In one case, it's legalized gambling, but on the other case, it is an engine for investing and growing your wealth. While today I feel like it reflects the former, I am still a believer in the latter, and that the stock market is a platform for growing wealth. I think a lot of this has to do with the decision making and the thought process that we have regarding the market. Are we buying short? Are we just day trading on a day-to-day basis? Or are we looking at the long haul? Are we investing in quality companies and just sticking it out? What do you think about the market? How do you feel about the high volume of trading? Are you day trading? What do you even think about Warren Buffett's quote? Do you think it's practical and applicable today? Leave a comment below. I'd like to know. Thank you all for watching. Again, please like, comment, subscribe. It really helps me out. And I'll see you soon.